Hello, my name is Renan Raminelli. I will show to you how it works, the RiskDesk. So it's a quick view about the product here, how it works and some functionalities. So let's go. RiskDesk is a tool for risk management, a professional risk management for traders that want to be more consistent. So how it works? Let's be very practical here. It's it has also in MetaTrader 4, but it's better on MetaTrader 5. We are only having it available on MetaTrader 5. Here we have the MetaTrader 5. Here it's a demo account, so you can see how it works. I already put on the chart, so it's here. You can see RiskDesk. It's on, right? When you see the panel appears here on the left side, but let's see the properties first. As you can see, there are a lot of properties. Before the properties, I will just show a bit about the code here. Here, RiskDesk, and this is also about the RiskDesk. As you can see, 2080 lines, more 7,500. Uh, so now RiskDesk has approximately 9,500 lines. It appears to be very simple when you see the panel, but actually it's quite complex. So what it has? First, when you open the properties, some properties here in the beginning about the company. Here, when you have RiskDesk, you can always trade on demo accounts. You don't have to pay to use on trade on demo accounts. Uh, it works uh, normal on demo accounts, but when you put on real accounts, the system recognizes it and it requires you to subscribe to the service. And when you pay on the website, you put your email, and here on license email, you put your email, and you put, for example, here your email, okay, and it sees with the system that you paid and it recognizes and you can work on real accounts. So it's here you put your email to trade on demo. If sorry, to trade on real accounts. If it's to trade on demo, you don't need to put the email here. And here first you have risk, sanitization data field here. So it's a risk data sanitization, which means you put the risk you want to have on your trade, but it has a few layers to make it impossible to go wrong the risk. So if you want to risk like 2% on your trade, you have to put 2 here, but you have to have 2 here and 2 here also, and here also. So it has like internal verification because maybe the system, some system can have a wrong data in the middle of the way, and the risk should be, for example, 1%, and it goes 100%. And instead of opening like one lot, it opens 100 lots. So to make this impossible, it was created this risk data sanitization process in several levels, several layers. So if it goes wrong, it goes to the next level, and so on. So you have here like four different fields. If you want to have a higher risk, you need to put all the other fields higher also. The one that goes first, it's here. So here I will put 1% and let the others 2%. Uh, Stop loss offset, take profit by it will go like 200. It means like it's 2 times the risk. They step and and other fields here. So let's see first how it goes there, and then we will come back here to all the other fields as fast as possible, so you understand. And if you want to go further, I can explain more. So here we have for charts, okay. Now we have windows of negotiation windows. So you can see here. Here it has also the candle time to close. For example, to the 4 hours, 3 hours and something, to the 30 minutes, 6 minutes, and so on. Now, no trade opened, it appears like this. If you click here, it goes to the panel. So let's see how this panel works. For example, if you have buy here, it's green. If you put sell, it's red. And now let's see the magic here. Here you have one button that shows levels, projected levels for stop loss and take profit. Remembering the take profit you put here in percentage. For example, if you want 3 times the risk, you put 300. If you want 3.5 times the risk, 350%, you know, and it's percentage of the risk. So for example, I will put 200 is 2 times the risk, 200% the risk. And how it works. So it calculates automatically the lot for you. How it calculates the lot? For example, stop loss bars. It will look back 5 bars to put your stop loss. So 1, 2, 3, 4, 5. And it puts here like a triangle for a red triangle, so you know where it is considering. For example, if you put 6, the triangle it's moving, you see? And the offset is the distance from this top here. So the distance here is 10, but you see it's moving too little because it's gold. Gold is 3 points, 3 digits after the point. So you can change it. Here, the standard comes with the standard value, but here, like you can put 100, the standard, so it will appear 100 base here, and you want the step to be, for example, 200, for example, just as an example. So now it will reload, and if you see here, it is 100 offset, so 100, it's 100 points. It's not pips, it's the last, it's points, always points, the last digit here, 100 points. And now the offsets by 200 each time you click, okay? So for each symbol, you put the standard you want here to load, and later it will load here the right amount. For example, I want 100. So you put 100 here. Now it will load 100 because I put that, and it will be 100 the step. But I want to buy, for example, buy. Now it's not the time to buy, or if you want to buy, you need to see where in the structure you will put your stop loss. So here it's considering this candle, put in an offset a plus of 1,000 points, which is $1 below this candle. If you put sell, it's also the same candle, but I want a closer candle. I want to sell, and I want to sell and put my stop here. So, and when you move, you see here it's risk 1%. So this distance, which is $15 approximately, with this account size. So $15 for $10,000, 1% is $100. It will be approximately 0.06, which here you can see how much is risking, $98, 0.96%. If you want to risk more in this area, you can increase here. For example, 1.5%, 0.09, $144. 2%, 2%, it is, you see, you have the risk, base risk, risk audit. If it is above the risk audit, it will lock and will not open above it. But if it's the same, it will open. Okay? So as you can see, I opened the trade, 2% risk. The projection put here, you see, and now the trade is opened. Now, so first trade opened. You can see here, it has the entry, the stop loss, the take profit, the lot opened lot, risk reward 1 to 2, how much it has moved, um, how much risking, how much the take profit in points and in the dollar value, the break-even levels, the partial close levels. These levels are the same, but it can be different. You know, you can put here any amount. It's always in base 100. It's always in base of risk. So 150 is 1.5 risk. 10, it's 10%. So break even. When it reaches 1.5 risk, 150% of the risk, it will move the break even to 10% of the risk. So it will move to the profit in 10%. When it goes 175% risk, it will move to 75%. So 5 levels. And partial close also. When it reaches 15%, 150%, it will close 20% of the opened position. When it reaches 175%, from the what is opened, it will close 25%. So here, let's say you have 10 lots. Here closed 2, it remained 8. Here it's 25%. You have 8, it will close 2, it remained 6. Here it's 33%. When it reaches 2 times the risk, 200%, it will close from the 6 to 1/3, and so on. Okay, and here we have a lot of other configurations that I can explain later if you are interested in knowing more. But just a quick view, you have like a margin, for example, margin protection. Here it's execution protection, like depending on the time of the latency to your broker. For example, this broker is 110 milliseconds. So you need to have something like 300 because it's round turn. It's 110, 220. So it needs to be like 300 here, the retry delay. But if you have like a VPS, I have VPS, for example, 1 millisecond, you can put this down, the retry delay like 50, 100. It can be lower. And how many times it tries to execute the order and how in cycles. It's an internal question, but it's very important. Here, margin, it's about when you open the trade, the maximum that this trade can use of your margin. For example, when it opens a trade, the maximum that the trade can use the margin of the you have, it's 20%. So if it gets like an amount of lots that would need 40% of your money, it would not open, it would block because the maximum allowed is 20%. Actually, it will not allow the 40%. It would decrease the lot until the trade opened use the not more than 20%. So if it was like 10 lots, would use 40%, it would decrease the lot to fit here. So it would open 5 lots and use maximum 20% margin. Also, if you have more than one position opened, the margin level, it's here, like now it's 20,000. But you can set up here the minimum margin level. You can put, for example, 1,000. And when it goes to open a position, it sees the margin level. And for example, if it's 1,000 here, and your margin level at that point is 900, it will not open the trade. You know, it will it will put on the Excel on the information that the trade could not be opened because the margin level was too low. Okay, so it has like margin protection and other features in the margin protection also. It has reduced risk, like if you lost, it can reduce the risk of the next trade automatically. For example, if it's true here, you lost like one trade, and the next trade you want to risk 50% less. So automatically you put 1%. When it goes, it will decrease by the half. Okay, trade cooldown. Here, it's important to have this at least some seconds to avoid opening more than one trade on the same click. So, uh, in general, I let some minutes, but for example, you click and then after 1 minute you want to click, you need to wait some seconds, like as many seconds as you put here to open the next trade. Loss limit 5%. So if on that day you have a drawdown of 5%, it will not allow you to open other trades. If it's true here, if you put false, it will allow, of course. So and also you have like session limits of loss, because you can have here three different sessions, you know, and you can set up the time, beginning of the session and end of the session, and uh, and if it's out of the session, when you click it, it will not allow to open the trade. And it has also session limit of loss. You know, you can put like 3% on that session. If I lost more than 3%, it won't allow me to open that trade. And if you started the session with reduced risk, you can put a lower risk for a session that is started with a reduced risk. And once the reduced risk, if you lost and you have reduced risk for the next trade, it only will allow you to increase the risk. It will increase the risk to the full risk only after a win. So if you put a reduced risk, you risked like 1%, the next trade will automatically be reduced by the half that you put when you click, and it will only increase to the full risk after you have a win. Okay? Uh, and it has trade cooldowns. After 2 laws, 3 laws, you can set up the time that it will not work the click. You know, if you put like after 2 laws, I want a cooldown of 60 minutes. So you had 2 losses after uh, this amount of minutes here. It will not work. If you have another loss in the sequence, you can put another cooldown, more 90 minutes. And for example, the 4 losses. So you have the 2 losses, stay like 60 minutes without trading. Uh, Again, another loss, more 90 minutes by these numbers. And if you had another loss, it will lock until the next session or the next day. So it will not work for that period. When you click, it will block the trade. And here you have a safety stop loss, like safety stop loss. It's put, you have a text document and also here, so you put 100. Even you have the risk here, 1%, 2%, but this is like another mechanism to avoid losing more than you planned. So you have in your mind, I never want to lose more than 100 in any trade. You put 100 here, you know, and always, even if you change in the other place, this number, if anything happens and the trade is with a loss bigger than this, it will close the trade automatically. You know, it's another mechanism to avoid losses. Okay, and you have the telemetry. It's an Excel document where everything is written there. Okay, so just a quick view about what you have here. Now let's see how it opens the trades. So I opened one trade here. Let's open another trade here. I will open here also a cell. Here the projection and the cap. Here this see here it's a cap. It's you can increase here as much as you want. It will always put the maximum amount of the cap audit. Okay, so I will increase here a bit. Okay, so it's very easy to see where it's considering. You know, if you change the time frame, you have to open again. Now, I want where I want my stop loss here. Okay, you know. So I will open here another one. For example, here oil. Here I will open a buy with a little more leeway to the trade. And here another trade. Here I will open another buy. I will risk a bit more. No, it's not allowing because of the risk. I need to change here if I want to open with a higher risk. Okay, but a little. So you see here it shows the amount of lots, how much you are risking. You will now always risk like you have also the commission, but it will always limit your risk. Okay. And for example, here you have the trade. If you have more than one trade, let's say I opened another trade. It gave a position limit. You have also position limits. So here it's allow multiple trades false. If you want to open more than one trade, you need to come here and put how many trades you want. 2, 3, 4, or unlimited. I will put just 2. So in this symbol, it's allowed 2 trades. And I will open another trade now, just so you can see. 1 trade per bar. It locks also the bar. So it has some locks. I will change the time frame because it locks by the bar. Trade cooldown. So it's really to not. You have to put the setup allowing you to do stupid things. You know. Let's just change here. Trade cooldown. That is it. Here. Yes. Want to show you. Now it's opened. So when you have more than one trade, you can navigate here between the trades on this chart specifically. Each chart has its own panel, you know? So one trade, the other trade, okay? You can see information about both. So basically, this is how it works. I can explain in more detail. And of course, just so you know, the RiskDesk, as I said, has like 9,500 lines of code. Okay. Uh, we have a manual, user manual. So I recommend to read. Everybody that will use RiskDesk or to understand how it works, there is this manual which has like more than dozens of pages, okay, 46 pages. Only in the end it explains about how to open the trade specifically, okay. Uh, to open the trade, it's like after the 44 page. But all before it explains what is each field on the properties, how it works, how to set up the risk desk for your computer, because you need to read to make it work. Okay, it's simple. It looks simple, but to make it work, you have to set up it properly. Okay, so if you want, I can explain more later. But you have the manual. You can read. I can explain. You can try and that's it. I think it covers most of the information you need to see by this time, and if you want, we can talk later. I appreciate the interest on RiskDesk, and hope to talk to you soon. Thank you so much.